10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. I'm Ladi Williams. Good to have you join us. Let's kick off now with the markets. Now, let's see what's happening with the oil markets. That we see prices are subdued this morning as a surging COVID-19 cases in China dimmed hopes of a recovery in fuel demand for the world's largest crude oil importer. Brent futures for February fell 26 cents to $83 a barrel in early trade, while U.S. crude fell about 26 cents to $78.70 a barrel, seeing oil below $100 per barrel most of this year. The scale of the latest outbreak and doubts over official data prompted some countries to enact new travel rules on Chinese visitors, even as China began dismantling the world's strictest COVID regime of lockdowns and testing. Oil markets were also buffeted by expectations of another U.S. interest rate increase in the United States as the Federal Reserve tries to limit price rises in a tight labor market. It will definitely be interesting to see how the Fed goes about fighting inflation in 2023. Back here to the National Assembly now. Yesterday, they passed the 2023 appropriation bill, pegging it at 21.83 trillion naira. This shows an increase of 1.32 trillion naira from the 20.51 trillion naira proposed by President Muhammadu Buhari. Of the sum, 6.6 trillion naira is for debt servicing, while 8.3 trillion naira will be utilized for recurrent expenditure and 5.9 trillion naira for capital expenditure. Our correspondent Terry Kumi reports.
Federal lawmakers cut short their Christmas break to attend to critical pieces of legislation, one of which is the 2023 appropriation bill. But first, lawmakers attend to the request for extension of the implementation of the 2022 budget, which is eventually extended from 31st December 2022 to 31st March 2023. The purpose for the extension is to ensure the implementation of key capital projects in the Act, which have not been funded as at this time. Both chambers then passed the 2022 supplementary budget of 819.5 billion naira, as requested by President Muhammadu Buhari.
The Appropriation Committee, having considered the detailed provisions of the bill, the contribution of the subcommittee, and general impact it makes in ameliorating the havoc caused by flood across the country.
Attention eventually shifts to the 2023 appropriation bill, which was deferred last week over what the Senate President described as problems discovered in it. As the 9th National Assembly passes its final appropriation bill, hopeful of maintaining the January to December budget cycle, the Senate President has a word for the executive arm.
I want to take this opportunity to urge the executive arm of government to implement the 2022 Appropriation Act. We have also passed the supplementary budget for 2022. We expect total implementation, no selective implementation.
The 2023 budget of 21.83 trillion naira passed by the National Assembly shows an increase of 1.32 trillion naira from the 20.51 trillion naira budget proposal of President Muhammadu Buhari in October this year. The recurrent expenditure is maintained at approximately 8.27 trillion naira. Capital expenditure increases from 5.35 to 5.9 trillion naira, while the debt servicing also increased from 6.31 to 6.6 trillion naira. Some key capital allocations include the Federal Ministry of Defense, 285 billion naira, Health, 134.9 billion naira, Power, 195.5 billion naira, and the Federal Ministry of Education, 153.7 billion naira. The House of Representatives had helped to resolve the 9-month strike by university lecturers earlier this year by making commitments to improve their welfare packages and make available revitalization funds to improve the infrastructure and operations of federal universities. The Tertiary Institutions Revitalization Fund of 300 billion naira and the 170 billion naira for salary renegotiation have been captured in the 2023 appropriation bill. 10.2 billion naira has also been provided for the university's pension, including arrears. President Muhammadu Buhari has 3 days to sign the 2023 budget, to maintain the January 1st to December 31st budget cycle reintroduced by this 9th Assembly. Terry Ikumi, Channels Television News.
And for commodities market update, we have Mr. Bismarck Rouhani, CEO, Financial Derivatives Company, join us via Zoom. Great to have you on the show, sir, and compliments of the season.
Compliments of the season to you and viewers in Nigeria.
Thank you so much. So it's a 1.3 trillion increase. Let's drill down now. We had that report there as the Senate passed the budget for 2023. What do you think about this increase, and how do you see this impacting the commodities market?
Firstly, a 1.3 trillion naira increase in a 170 trillion naira economy is insignificant. It is what are you going to use that money for that is more important. Don't forget, at the macro level, the Nigerian economy is struggling. It's suboptimal at best. At the micro level, it is even more challenging and more painful to the ordinary man on the street. So the reality is that this is a budget for an administration that has 57 days to an election and has in all maybe about 150 days to 170 days left to hand over to another government. Therefore, whatever is happening now, this is the twilight days of this administration. Whether we like it or not, there will be a supplementary budget by the next government. But will this suffice? And what is 21.7 trillion going to do to this economy if you allow that to run all the way to the end of it? No, it will not suffice. We have to be more ambitious and have to be more aggressive in the policy-making environment to make this economy have its impact and actually lift the people, not only economically, but to lift their hope that the future will be better than the present.
And what do you see for, funding and impact on our debt level, going into 2023?
Yeah, interestingly, I think the Senate debated yesterday about approximately 22, 23 trillion naira ways and means being converted, securitized at 9% per annum for 40 years. Yeah, that's just indicative. The reality is that the one-year paper today going at about almost 14%. And so if you're going to leave your money for 1 year and get 14%, you will not expect anybody to leave his money for 40 years and get 9% per annum. But it's better to securitize it and not doing anything, because it was a healthy situation where you had ways and means advances of that magnitude in this market. So it was distorting the yield curve and actually bringing about some macroeconomic imbalances. So I think to that extent it's done, but the way it's going to be funded is that both at the federal and state levels, there's going to be funding challenges. So we're going to go to the capital markets, we're going to go to individual savings. And don't forget, the more people save, the less they have to spend on consumption. The less they spend on consumption, the economy is maybe likely to contract. So we have challenges. The reality is that whether we like it or not, we'll have to go back to our creditors, both domestically and internationally, to reschedule our debt, to make it more acceptable and more manageable. Because our debt sustainability ratios, even though not dangerously low, is heading the trend, despite frightening for anybody that's lending money to that.
And looking at the global commodities market now, we see, traders in that space. You can say they had a good year, in 2022 with oil, grains, natural gas, hitting highs. But prices are far from the highs now. Do you think this downward trend will continue into 2023?
No, I think we have two benchmarks. One is what were the prices before the pandemic? What were the prices at the peak of the Russia-Ukraine war, the disruptive point? And where is it now? And what is it going to be looking at in future, in the next week, which is next year? Basically, what is happening now is that whether we like it or not, the price of natural gas is tenfold higher than what it was before the pandemic. Okay? The price of oil is at $82, $83 a barrel. Projected that it will remain at about $80. The peak in 2022 was about almost $128 to $130 a barrel. But the irony is that paradoxically, what we are seeing is that Nigeria is not able to produce and actually exploit this market to its benefit. considered Angola, Kuwait, Saudi Arabia, they are not only enjoying growth, they're enjoying high revenue, while Nigeria's growth is being really plagued by the oil theft and the failure of the security agencies, failure or complicity of the security agencies to rein this in, to ensure that we can maximize the potential. Nigeria is not a Robinson Crusoe economy. Nigeria is connected with the rest of the world. And therefore, as we go forward, and we are projecting approximately 1.7 million barrels of oil a day, but guess what? We are producing about 1.1. And of those 1.1, the bulk of it comes from the deep water and offshore, where the revenue that accrues to the federal government of Nigeria is minimal. So we have some real important and difficult decisions to make. I'm happy that all of the candidates, ranging from Mr. Kwakwanso to Mr. Atiku, Bola Ahmed Tinubu, and Peter Obi, have all said right things, that they would look into this oil theft and security problem. But again, everything, talk is cheap. The actions are difficult. So that's why we have to wait and see what happens in 58 or 59 days from now when we see the results of the election.
And looking at oil prices right now, how's that impacting our subsidy bill?
Well, the reality is that the oil price, when they reduce, it actually reduces the subsidy. But unfortunately, the subsidy has components. If you look at the template, the security component, the transfer component, and then the bridging component, there are too many things to do with subsidies. And subsidies are reverse taxes. They distort economic activity. Luckily, all the candidates are saying that, again, talk is cheap. This reduction in the price has not reflected in the reduction in the subsidy or reduction in the oil, the refined product markets. There are still queues all over Nigeria. People are hurting. So that has nothing to do with the price. That has something to do with the structure of that industry and the structure of the regulation. So we need to get back to the basics. Who are these economic warlords or economic terrorists who are actually ensuring that the people do not get petrol or in their cars, and that we spend horrendous number of hours queuing up, which is taken away from national productivity. And as you know, our national productivity, labor productivity, is mostly negative at this time, and you are making it worse. So basically, you are going from a banana republic to what can call the cassava republic.
And it's almost like the field queues have become a tradition for the end of the year and for the Christmas holidays. And we saw that, happen this year, and it's still happening, right now. But looking at the global commodities markets now, do you think in 2023, geopolitics will still be the mover of that space?
It is true. I think the world has come to factor in that the Ukraine war is going to be there for some time, but it's going to have minimal disruption. So the oil price cap they put on the Russians, and then the strengthening of the dollar, and let me put it somewhere, the isolation of the Ukraine war from the rest of the world, as it were, means that the impact of that on global commodity prices is going to be minimal. So we expect global commodity prices to begin to decline, and they've actually started declining. Therefore, that cannot be an excuse for domestic inflation. What has happened globally is that interest rates have increased to douse the overheating of the economy. We are watching to see whether there will be a recession, global recession, but it's going to be a shallow recession, which means that we'll recover from it very quickly. Then the most important thing for us is that yesterday, our largest trading partner, China, revised their growth rate up to 8.4%. That is above the 10-year trend. So if China is doing that and opening up the economy now, they are allowing their people to travel out from January 5th, even though there's constraints about COVID tolerance level. I think that we will see brighter days as we go along in the second quarter and third quarter. Luckily, that will also coincide with the change of administration in Nigeria and change of policy ideology. So all of those things, there'll be an opportunity there if we are if we can actually elect the right candidates or how people would address the right policies. So I think that will help us. So let me take it your question. Globally, commodity prices trend downwards. Globally, there will be a contraction in growth. Domestically, there will be a increased linkage between Nigeria and the global economy. Nigeria will benefit mainly from the price of LNG, the price of cocoa, and also flatlining in the oil price. Then, of course, you now come back to the non-oil commodities and the service sector. That's where the initiatives of states like Edo State who are embarking on tourism, and I think the Ekiti State as well, those kind of initiatives and those areas will now attract invisible flows into the country. Tourism, culture, and the historical, the cultural heritage of people. Those kind of things, together with the entertainment sector, Burna Boys, the Davidos, and others, and all of these guys generating incomes. And once you allow the foreign exchange market to have a proper structure, those monies will flow into the central and help to make the currency more stable. Right now, the currency is highly unstable and volatile. Even though it's supposed to appreciate in December, we are seeing some depreciation.
Talking about currency, I remember if it was, I think it was the beginning of this year or the end of last year, you did tell me that the US dollar was going to have a strong year. And I believe we've seen that, happen. The DXY there has surged to new high, this year. Going into 2023, do you still see the dollar, strengthening and, other currencies weakening? Like what we've seen, with the Naira this year, it's been a tough year for the Naira.
I'm not sure that my prediction had anything to do with the dollar. It was just that we're at times predictions, and that there's a difference between estimates and guesstimates. And I think this was a blend. The reality is that the dollar has gained 17-18% this year, right? I was right, and I was lucky to get it right. But this time, I think the dollar will flatline 2023. In other words, we will see some easing as the interest rates surge by the Federal Reserve begins to ease up. The dollar relative to the basket of currencies will begin to moderate. So I'm not too sure, and that means that the other global currencies will begin to appreciate. So the dollar against the pound, which had come as low as 1.02, is now at about 1.15, 1.6. Against the euro, it's about almost equivalent. So we are seeing parity there. The Ghanaian currency has actually appreciated some, but then they are having their own problems. So globally, the currency markets will remain volatile, but my forecast is that Nigeria will take the bull by the horns, and that, as you notice, yesterday, the I&E window rate went down to 456, I think. I think it will get to 460 in the next day or two. In that case, the Naira will probably appreciate in the foreign market of what we call the forces of convergence working together. But there's still work to be done, a lot of work to be done. Maybe let's be cautiously optimistic that, like I said, been a long time coming, but change is going to come.
Change is going to come. All right. Look, what are you seeing for domestic commodities markets right here in Nigeria in 2023?
Yeah, I was looking at some of the domestic commodity prices yesterday, especially we've seen some sharp increases in rice, which is about 45, 46, which will actually ease a little bit in January after the celebrations. I've seen melon, egusi, has gone up by about 110%, while food inflation is actually at about 24, 25%. So we've seen that. So the more inelastic commodities, like melon, I think to some extent beans, rice, having elastic, flour for making bread. So we've seen the price of bread. Most of these commodities are crystallized. What do we see? There was the flood effect, and then there was the global effect, and then there's the smuggling across Nigeria. So what we've seen is that if you look at cocoa, even though the price are high, it is being smuggled across the country because the exchange rate is distorted. So if they smuggle the cocoa into Lomé, to Ghana, they get paid in dollars, and they bring the dollars and convert it at 750, as against putting it through the export domicile account and getting 456. This is a smuggler's paradise. I think that as we make the exchange rate go into equilibrium, domestic commodity prices begin to ease, and the people begin to see the benefit. But right now, we are in an inflationary environment, also where the government is borrowing excessive and also distorting the savings function. So without trying to bore our viewers with the economic details, the reality is that expect that inflation this year will end at about 22%. That is this month's inflation. But next year, we expect it to improve to about 17, 18%. So where's the later part of the year, not in the early part?
All right, we'll be watching out for all of that. Thank you so much, Mr. Bismarck Rouhani, CEO of Financial Derivatives Company, and compliments of the season. Thank you so much.
Thank you for having me. Thank you.
All right, so we'll take a break now. When we come back, we'll look at the telecom sector's operators threaten to suspend USSD services. That's our next conversation. Just stay with us. Welcome back. Still watching Business Morning live from Channels HQ. To our next conversation now, the Association of Licensed Telecommunications Operators of Nigeria says the accumulated debt from the unstructured supplementary service data that's the USSD owed to them by banks rose to 80 billion as of November this year, and now telcos are threatening to withdraw the USSD services. Let's talk to Engineer Gbenga Adebayo, Chairman, Association of Licensed Telcos, Telecom Operators of Nigeria. Alton, great to have you on the program. Good morning.
Thank you for having me. Good morning.
So I remember earlier this year, your association did threaten to withdraw these services. I think it was around March, and the Minister of Communication and Digital Economy did intervene. But it looks like the matter was not resolved.
Unfortunately so, in spite of the ministerial intervention that we have had, also despite the involvement of the higher authority central bank, some of the double C money banks have refused to honor their obligations that's due on USSD, and it has made it difficult for us to continue to provide these services without having to recover what has been accumulated in debt. I must remind that historically we've been on this since 2019. In March 2021, we sought for high-level intervention at the level of the minister, the two regulators, NCC and the CBN. And it was agreed that some protocol will be followed in ensuring that the debt is defrayed. At that time, it stood at 42 billion naira. Unfortunately, some of the banks have refused to pay this money. Some are paying, but paying in small trickles. And at the end of the year, it is what it is. And we are very, very concerned. Now we're talking about financial inclusion. Now we're talking about digital economy and the rest of them. Without this issue of USSD being resolved, it would be a bit difficult to continue to provide services for the banks.
And what are the banks saying, at this time? Have you gotten any response from them?
Some are paying, but others are being evasive. They're giving all kinds of conditions for payment to be made. But the bottom line is that these services have been provided. We continue to provide these services on non-discriminatory basis to all subscribers of banks. I would not see any reason why anyone would not honor their obligations as due. In actual fact, it's beginning to be a reputation problem for some of the banks that are not paying. And if care is not taken, we've now approached our regulator to seek for a partial withdrawal of services. As soon as we have regulatory clearance, proceed. We're also going to seek clearance from appropriate authorities to name a few of those banks that are actually highly indebted to the operators. Certainly, it's not something that will go away. It must be cured, and this money has to be paid. So some are paid, others are just not paying attention, actually.
And it looks like it's the users of these services that are going to suffer, from this disruption.
Unfortunately so. And the sad thing is that these are services that the banks charge. I mean, no bank offers USSD service for its subscribers free of charge. They charge the subscriber for it. Natural fact, monies are deducted from subscriber accounts directly. We're only saying that the banks should pay to the operators what is due to them that has been agreed as due. I must also remind us that at the meeting of March 2021, it was agreed that this service would be billed at a particular rate. way below the amount the banks are charging. So in spite of that, the interconnect exchange rate between us and the banks is much smaller than what the banks are charging. A number of them are still not paying. So there's really no reason for this, actually. But as it is, we cannot continue to subsidize this service for the banks. Banks are making money out of USSD. They're charging their customers for it, and we don't see any reason why operators should not pay.
What percentage of the banks are owing at this time?
Well, because I'm on public television, I won't be able to put a number to it, but quite a lot of them are owing. Few are paying. Others are paying in small amounts just to take down the tension. But the issue remains that collectively, the sum is what it is today. It is debt assigned to the operators. And as it is, as an industry, both industries are highly regulated. The financial sector highly regulated, as you do know. Same for the communication sector. And so in spite of the regulatory instrument that we have activated to ensure that this happens, and having followed due process in this regard, we are still very concerned that despite the high level intervention, even by the governor of CPN, the banks haven't lived up to their obligations in this regard. And so that's a matter of concern. And we think that if this continues, it will not only impact on the digital economy, but also impact on the financial technology as well. Because once USSD services is withdrawn, a number of services, banking applications will not work again. So in national interest, we have continued to provide this service. We are consulting with the regulators, but we do not see any reason why the banks are not just paying what they should pay. So I think problem for them. At some point, if we are not getting any traction, as I said earlier, we'll have to seek for regulatory clearance to publish names of those who are owing, an amount of money that they owe the banks so that the public can see and ask them what happens to deductions made from their own transactions.
All right. Let's look at the telecom sector now. 2022 is coming to an end, and most sectors in Nigeria, had a tough year this year. How resilient was the telecom sector, with rising cost of energy and inflation?
Difficult for us as it is for other sectors of the economy. As you do know, in the beginning of the year, projections were that diesel will cost less than 300 naira a litre. Today, as it stands, it's over 800 naira in some parts of the country, even up to 1,000 delivered to site. Number of sites are still powered by diesel oil, and it's quite difficult and very challenging. But we are glad that despite of the problem, continue to provide services and support the entire economy. Our sector has contributed one of the largest to the GDP, as you do know. Also, we continue to support other sectors of the economy, financial services, like you are seeing, even despite the USSD debt. We're also supporting government. You know that also in 2022, we introduced generation 5G, which will change the data ecosystem, and quite a number of services that we continue to provide for subscribers across the country. The good thing is that we have been able to cover most and all parts of the country with some form of communication services or the other, whether 3G, 4G, or 5G. We have very few blind spots across the country today. In spite of the security challenges in very many areas, many parts of the country, services continue to be available and made available to subscribers in those areas. So when we look at the entire ecosystem, I think the industry has done quite well. I must also mention the name and SIM linkage, which now has enabled us to develop fairly reliable national identity database as part of the contributions of the sector in the digital ecosystem. And we will look at all of this collectively, despite the problems that we face as it is by other sectors of the economy. We continue to play a leading role in supporting the entire economy, and we hope to do so and even more in the coming year. But we will not fail to seek government support, particularly in protection of our infrastructure. This remains very critical national economic infrastructure, and we believe that government should please accord telecom infrastructure the right kind of protection to enable us to continue to provide services to all persons across the long length and breadth of the country.
All right, let's look at broadband penetration in Nigeria this year. Were there any improvements? Did we get more subscribers this year?
Significantly so. Lots more people have been included. A number of sites that were connected via radio links have been connected to the fiber backbone. So broadband access are more available across the country. Affordability is also guaranteed. As you know as well, despite of the high cost of providing services, our end user prices remain the same. We do not have any prices in the year, though we are challenged by that, know that. But the fact remains that broadband penetration has been significantly achieved. We've done a lot more in this year than we've done in years back, thanks to the policymakers, thanks to the regulator, and of course, thanks to the subscribers. We hope that 2023 will be better. But we can't have a resilient broadband if we do not protect the backbone infrastructure. So it goes back to the issue of having to provide our infrastructure as critical economy infrastructure to be able to ensure availability of sites at all times in all places. So security of this infrastructure is very critical. We're having lots of fiber cuts across the country due to roadworks. We're having a lot of vandalization of infrastructure, a lot of stealing of diesel from our side, stealing of generators, stealing of batteries, and all of that. And this is just because the infrastructure remains very vulnerable. So we think that government should do a lot more to protect us and the infrastructure that support us, for us to be able to provide greater support for the economy.
All right, before I let you go now, engineer, so, regarding this whole debt owed by the banks, what do you think is the way forward? Is there some kind of mechanism to, discourage owing, more going into 2023? Is there a way that these funds can be remitted directly, so that you don't have to be owed, going forward?
We have some instruments of collection and recovery. And I think all that is required is for the banks to live up to their obligations in this regard. We have some indicative document that is guiding our relationship. We have actually a standing committee between us and the Committee of Bank CEOs. I think what is just required is for the banks to live up to their responsibility within those guidelines. And that will clear the debt. But the fact remains that if attention is not paid to the outstanding, which is growing by the day, debt is not something that you wish away. It will never go away. And I think that what is required is that even for reasons of their own reputation, then the banks that are owing should to the obligation by debt, so that we can have a fairly smooth relationship going forward. Otherwise, this issue of USSD and the debt thing is something that is waiting in the corner. Someday, if care is not taken, it will explode. And if it does, it will disrupt all the effort of stakeholders, even including the financial sector itself, the effort that they are making in ensuring financial inclusion. So I think the appeal is to the banks to actually honor the obligation as due, following the instruments we have agreed and the mechanism of recovery and collection that we have all agreed.
All right, but I hope this is resolved as soon as possible so we can continue to enjoy the USSD services. Thank you so much, Engineer Gbenga Adebayo, Chairman, Association of Licensed Telecom Operators of Nigeria, and compliments of the season.
Thank you very much for having me. I wish you same. Thank you.
All right, now let's head on to the markets. Let's see. I did, talk to Will. Remember, I did tell you something interesting would happen with that Geregu share price, and something did happen.
Something did happen. It was quite phenomenal yesterday. We saw a 9.96% uptick with Geregu, adding 11 naira 50 kobo to his share price. And it's more like investors just, gobbled that stock yesterday. Just hearing the news that Afrexim Bank was going to, acquire a minority stake in that company, the power company. Investors are just like, they just want to take it out.
Quite bullish news.
Quite bullish news, and it's good for investors, confidence at this moment, because they're looking for something to hold on to, and this kind of news, actually boosts the market. Yeah. And we saw the market's performance yesterday being spurred, as I mentioned, by buying interest in Geregu and GTCO. Zenith Bank also contributed to that bullish performance. Now, month to date is at 4.8%, and the year-to-date gain is currently at 16.9% at the moment. Now, we see total volume of trade trades jumping by over 255% yesterday to 498.73 million units. And before I forget, the market cap has crossed the 27 trillion naira mark there. Now we saw, and the volume and value transacted yesterday was also mirroring that performance. Sectoral performance, if we look at it, was also broadly positive. We saw the banking, insurance, consumer goods performing in yesterday's trading session, boosting gains. But the oil and gas and industrial goods indexes were unchanged from their opening levels. Now, we're wondering what's going on in that space, but we'll probably get that answer very soon. We're going to talk to Abdulrasheed Momo, equity trader at THW Stockbrokers. Good morning, Abdulrasheed. It's good to have you on the program.
Good morning and happy holidays.
Happy holidays to you too. Yesterday, we were just talking about it, Vladi, earlier. I'm just talking about Giregu performing strongly yesterday. Now, this is following the news of Afrexim's plan to acquire the minority stake in the company. How would you assess Giregu's fundamentals at the moment?
Where do I start from? That news alone has given most investors what they needed to hear. I mean, it's not just listing a company on the floor of the exchange, but having African Bank coming in to invest. That means they have trust, and for them putting a stake in that company shows, I mean, that things are going to work out. Like, I did some analysis looking at Giregu. I looked at even the cost of running a power plant is not a small thing. I'm looking at, even for megawatt, we're looking at about $1.5 billion just to create one. And Giregu has a capacity of about 435 megawatts. You can imagine how much has been spent so far on Giregu. And if you look at Giregu based on the management, you look at even the chairman, Femi Otedola, he's been known in the market from the period of AP shares when he moved it from FO, from low ranks to about 300 naira then. He's someone that's been trusted so far. And I think I always tell people one thing: follow smart money. That's the word, follow smart money. Let me just divert you to what I'm saying, that if you want to buy stock in the market, you look at the people like the names like look at the Dangotes, look at the Imovia, look at the Tony Elumelu, and look at the Otedolas. Just because their lifestyle don't change, even when the market crashed 2008, to date, those companies have been paying higher dividends. So my advice always tell people, follow smart money. I don't think you're gonna lose. For Giregu, if you look at Giregu, from the volumes they've done so far, even before the news came, the overall old structure is tight for now. We're looking at about I think 200 and something billion or so. I feel for fair value is about 120. But when it comes to technicals, it's still new. The resistance we saw was about 130. That would be one area to hit. But I can tell you technically, the way this stock is moving, we will be seeing areas in the long term about 3 to 500 naira. Because this was how Seplat started. Seplat started from about 200 naira, but Seplat is about 1,000 plus today. So for me, Giregu is a stock to watch for the future.
That's interesting.
And so far, it's the only one quoted in the market. There's no competition.
Do you think this is going to spur other power companies to probably get on board the NGX, probably, check their books, dust their papers,
they
ensure that they can come into the
for
market?
you to be quoted. For you to be quoted, that means you have got to come clean. You understand? So for you to be quoted, you have to come clean. So if Giregu has said now that they are quoted, that means they've said to watch their debt meaning in public. They've said to come clean. So that is all about transparency. That's the key word, transparency.
What would you say the year-to-date index? How high do you think that is going to go?
Yeah, Laddie, if Laddie can get me right, I said something. Hook or crook, 50,000 for now.
Laddie did get that.
yeah, 50,000 points. And so far, yeah, it's been finding it difficult to break that trend. I know one thing that all rallies actually happened in the middle of November. The market lost momentum for the period of, I think, April, May. And we lost from May till about November, the market has been down. And just in how many, this is not up to a month. Let's say we start the rally from the 11th of November till date. The market has virtually recovered so much, from about 44,000 to about 49,000 plus now. And mind you, all these rallies you are seeing now, it's not even, we are not seeing stocks like Nestle, thanks them. You understand? Airtel, MTN, they've not even moved. So you can imagine if these stocks add value in terms of price appreciation, what will happen to the overall index? You can imagine what's going to happen. So far, what we have seen is the market is trading within a very strong resistance levels. And coupled with the fact that we are in the Santa Claus rally, one. Number two, we are approaching year end, which in quote we call the window dressing period, where we see a lot of stocks appreciate. And this trend normally happens, like if you look at overall market trend, the best periods to actually trade in the market after all the bearish periods, actually November. And the period of December, for the past, about 2008, except for 2019, the period of November has always been bullish.
Okay.
So December has always been a period where a lot of share prices move up.
Okay, so Mr.
I think so far we might see a pursuit of hitting the 50,000 points.
Okay, that we'll be looking out for that. And so November, the best time to invest. And the market is still on the path of recovery. Thank you so much, Mr. Abdulrasheed, equity trader, TLW stockbrokers, for joining us on the program.
Thank you.
So, Laddie, this is the market. This is what
so by hook or crook,
we're getting
he
to
did mention this 50K.
Yes, we're getting there.
And we'll see if that happens today.
We'll definitely watch out.
All right, thank you so much, Will. All right, now let's head on to the UK. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So, according to a survey, about 2/3 of UK consumers are planning to cut their discretionary spending in 2023, amid concerns about the cost of living crisis. I guess our consumers are going into 2023 defensive.
I think defensive is a good term. Good morning, Laddie. These revelations have been published today by KPMG. They've been doing a forensic look at consumer habits. And we know that consumer habits are changing in the face of pretty severe inflation, currently in double digits in the UK, a 41-year high. All of the data that we've been receiving, whether it's from the labour market, from retail sales, from GDP, are showing that people are cutting back. We had pretty alarming retail sales figures for the month of November, where we did have Black Friday, a sales shopping day imported by America. Sales were down. Retail sales were down 0.4%, and that's because lots of people are quiet quitting. Quiet quitting is a new term, basically saying that, people that would typically buy luxury goods are no longer buying that because they want to start saving. So 2/3 of people, according to KPMG, are going to be changing their consumer habits in 2023. And there are other reasons. Lots of people who are on fixed term mortgages, so that means basically your mortgage payment is the same every month, will soon be on a variable mortgage deal. And we know that mortgage rates have increased drastically since Liz Truss's pretty disastrous budget. And there are so many many other reasons. This is going to be a particular concern to the government when they sit back in the House of Commons in a couple of weeks' time, because, of course, they want to get the GDP back on track. The Bank of England are already warning that we are in a recession. It is likely to be the longest recession on record. And if people don't feel confident to spend, then unfortunately, low GDP is what we can expect in the months, potentially years to come.
And obviously, you know, quiet quitting would definitely have an impact on businesses going forward, and that would definitely not bring any enthusiasm to that kind of business. Thank you so much, Juliana. Always great to talk to you. Thank you so much. See you tomorrow.
You too. Thank you.
All right, now let's see what's happening with the markets. We know this market actually lacks enthusiasm right now. It's a very flat market. We see the sentiments there, still 28 points, still fear, just like we had yesterday. If we look at the market cap, right now we see it's moving further away from the $800 billion mark there, down 1.88%. Quite a tough Christmas for investors in this market. Volume traded $29.96 billion. That's up 34.99%. We see Bitcoin dominance there at 40.09%. Let's look at the price of Bitcoin this morning, $16,636. Still ranging between that range, not trying to get above 17,000 as most investors were expecting at this point. But it looks like there's still downward pressure there, down 1.51%, $16.46 billion. That's what's traded this morning. Look at the price of Ethereum, also below the $1,200 mark there, down 2.27%. And we see volume low, $4.67 billion. Lack of liquidity in this market right now. Let's look at the top cryptos of 2022. We see GMX there, decentralized exchange, $42.10. This year-to-date performance, 111% up. And we see TWT there, $1.26, up 92% in 2022. And Leo, even though it's in the negative, it's also a best performer. It's just down 3.5% this year at $3.55. And we see the worst cryptos of 2022 next. And we do know the story there. Terra, the implosion there, down 99.99%, basically 100% down. FTT token, obviously because the FTX exchange, that's the FTX token there, 87 cents, down 98% in 2022. Let's bring in Solomon Amunde now, a digital market analyst. Hello, Solomon. Great to have you. Good morning. Hello, Solomon.
Yeah,
all right.
Morning, laddie. Morning.
Oh, fantastic. I can
hear you. Good morning.
I can hear you loud and clear now. So Solomon, I was there looking at the top performers of 2022. We see GMX topping that counter. So decentralized exchange up 111%. And obviously we've seen the centralized exchanges and centralized platforms have issues in 2022. Is this a sign of things to come in 2023 for decentralization?
Yeah, basically, decentralization is actually the future, and DEXs will definitely remain the future of crypto platforms where we should see exchange of assets, because we don't have anybody controlling and regulating it, basically. So next year, we expect to see a lot from DEXs, likes of PancakeSwap, and some wallet services too that give you total control over your services, over your tokens rather. We expect to see those projects do very well next year.
And now if we flip over to the worst performers, Terra, 99.99%. Is this dead now? FTT, dead. Solana, are they all going to die?
Well, crypto is one ecosystem where you can't say for certain. It might take 5, 6, 7 years, but as long as they have a very strong community rallying behind it, I mean, these are all codes. Anything can happen. They might just choose to redominate Terra Luna and maybe divide it by 1,000, and afterwards you might see the price of Terra Luna get to about $1 for the short term, but you can't really say. Right now, the projects still have a very strong community rallying behind it. Solana, Terra Luna, FTT, they're still trying to recover some of the funds. So it's an uncertain future, but you can't really write them out. But for investors, it's a bad idea investing in any of those projects right now.
Yeah, because even that mantra about buying when the market is fearful, there are some things you can't buy when the market is fearful. But going into 2023 now, what do you see are going to be the winners? You know, talking about platforms going into 2023 in the crypto space.
Yeah, I expect DEXs to come out extremely strong in 2023 because centralized exchanges have given them that platform and the narrative for them to go all out and rack in all the volumes and list all the token pairs and also get into derivative and futures trading. We're already seeing Uniswap doing billions of dollars in volume almost every month. So I expect next year to be a year for DEXs to take over and cement their position in terms of exchange of assets.
And looking at the DEXs that are available now, would you say they're truly decentralized? Because we did get that issue with MetaMask taking some customer information. Are they really decentralized?
Yeah, as long as we have a DAO that puts everything that is being applied on these DEXs, and we'll just believe that they are as decentralized as they can be. All that matters now is for the community members to make sure they secure a token. That's the token of the DEX or the token of the protocol or the platform that gives them the DAO privileges to be able to vote what they want and what they don't want. So it's the easiest form of democracy when you have a token that you can use to say what you want and vote it into place.
All right. Before I let you go, Solomon, which project or token is that one that you're going to go all in for 2023?
Okay, so looking into 2023, yeah, there are so many other projects. I'm looking at PancakeSwap. Like I'm really looking at going very heavy on PancakeSwap. Not expecting a 500% return, but a very reasonable 200% return to about 250% return, because it's a major DEX, and they're also looking at expanding to the Aptos ecosystem being the new blockchain. And I strongly believe that would also expand to other blockchains too.
All right, I guess that's your all-in for 2020. Thank you so much, Solomon Amunde. Thank you. And compliments of the season.
Yeah, compliment.
Right. All right, so that's the market today, and that's the show today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, check our videos. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.